Hey guys, Kill Stokes here, and welcome back to another weekend edition of The Trading Edge. If you guys are brand new, I am a former struggling trader turned consistently profitable trader turned money manager for a very small period of time, and I am now a trading coach and co-founder of Tier1Trading.com, which is the premier educational source for aspiring traders. Now, before we get into the charts, I need your help. I'm about 3/4 way done my new course, the Foundation Course 2.0, and I need your help to finish it. Typically what I do before I ever release a course is I give out a little teaser, I let a small select group of traders check it out, they give me feedback, I make any improvements or adjustments that I need to make before releasing the full thing. Now, this year I plan on doing the same thing. However, instead of going after that small select group of traders, I wanted to open it up to you guys on YouTube. So mark your calendars. Next Sunday, I will be premiering the Foundation Course 2.0 here on YouTube. I don't have a set time yet, but if you're subscribed and you have that little notification bell hit, you will be notified as soon as I put up the event. So I look forward to seeing you guys there, and I look forward to feedback. That way I can make the course the best course available. Now, as always, we're going to split this video up into two different versions. The YouTube version, we're going to take a look at a single chart, and the real version, or the extended version, that's a more polite way of saying it, we're going to take a look at the entire portfolio of pairs that are on my list for this week in the markets. All right, traders, so let's get started on the Aussie dollar. And this is one of my favorite setups of the week. And we're going to start on the daily chart as always to get a higher bird's eye view. Give me a second. I want to answer one more question on the chat. All right, sorry about that back. Had a question on the chat about candlesticks, and I wanted to give him an answer before I get started. But Aussie dollar on the daily, we've had a really a classic rotation in trend, and I'll show you what has happened recently. We've been in a bearish trend here. We put in a new structure low. We then put in a retracement followed by a lower low, lower close. So all signs pointing to a continuation in that trend. Then we actually rallied back up. Hard to see here, but we actually did. Actually, did we? No, we rallied back up. We gapped past it. We rallied back up to retest our previous structure highs. So a very, very deep retracement, which we know is also a sign for a slowing trend. So we have two things that showed a sign of a slowing trend right here. We have a very shallow extension on the bottom side. We have a very deep retracement on the top side. We double top here. We show a little bit of a retracement. Don't even come close, maybe about 50% the way down of retesting our previous structure lows. And then we follow that up with a higher high, higher close right here. And this was a level that we were looking for intraday during the live rooms this week. Not only a violation of this level, but I had a sneaky, slightly higher level as well that I want to see violated, and that was right here at about 70s. So now that we've put in a higher high, higher close, that allows me to predict that price action is likely to go higher versus lower. And one of the ways I can take advantage of that is going to be a pullback trade. And you can see, as expected, we're already starting to see some relief of this high momentum bullish candle. So let's drop down to the 4-hour chart and take a look at things, right? 4-hour chart makes our picture a little bit clearer. We actually have an inverse head and shoulders. Forgot who I was talking to about this. We had a trial member that came on. They're asking questions about trading head and shoulders and should they trade inverse head and shoulders and regular head and shoulders all at the same time or focus on one. And we had a nice little conversation about how an inverse head and shoulders is actually different than, or inverted head and shoulders is actually different than a head and shoulders bottom, right? A lot of people look at head and shoulders top, the head and shoulders bottom, and they'll call a head and shoulders bottom an inverted one. Well, it's actually, at least the way I define it and the way I was taught, an inverted head and shoulders is actually a completely different pattern formation. And this is a good example because this is technically a head and shoulders bottom with how it's formed. The head is pointing towards the bottom. However, it's coming off of a bullish move. And it's just the difference. You can trade it the same way. I don't really like getting caught up in names and stuff, but we use them to teach and we use them to answer questions. So from that aspect, it's just important that we're on the same page here. But fact of the matter is we broke above the shoulder line here, right? This blue line. Again, we also broke above that yellow line that was on my radar. And now we're pulling back into our kill zone. Remember, our kill zone is going to be that previous structure high right here to that outside return right here. We also have the RSI going over bought, which could set us up for that potential RSI swap. And if you guys haven't done so already, I believe it was, let me just check my calendar real quick. I'm trying to figure out what Q&A session we talked about it. We did a little bit of a deep dive in the RSI. I kind of stopped myself because we were getting a little bit too advanced, stuff that you don't really need to know. But if you're interested more in the RSI, go back to the July 8th Q&A. I showed you guys some funky stuff with the RSI. Now, it's the only indicator I use. I plan on digging deeper into it just because I know a lot more about it, or I know a lot of different ways you can trade with it that I don't actually show you guys right now, and that I don't actually use in my own trading. That's the reason I don't show it to you. I try not to teach you things that I don't personally use. But that is on my massive to-do list to check out more, because there are some different ways you can use the RSI aside from your traditional overbought and oversold. And I actually have a way that you can look at it in a completely different light. It may confuse you from using it your traditional ways, but again, different strategies for different folks. But anyway, you can see that RSI is overbought. One of the things I like to see is the RSI go from directly from an overbought to an oversold condition. I call that an RSI swap because I'm not creative and I can't make great names for things. But that's something that I would definitely pay attention to as we come back into this level. But fact of the matter is, this is our kill zone between 70.50s and between really the 70-cent level down at the bottom. This is an area in which you should be looking for long opportunities. And I think that price can go up to about 70.50s. We have a little bit of, excuse me, Fibonacci confluence up there. I'll draw some fibs on. Fib extension, swing low to swing high. Let's go right here. Back down. Let's just take this, this move right here. Our most recent move, well, actually it's not our most recent move, a smaller move, and then we'll take our most recent move right here, and let's see if we have any confluence with these Fibonacci's as we kind of dial in here. Yep, you can see that we have two 127s, we have a 1414 as well. I don't really personally care for that one, but you could add it if you want. But two 127 Fibonacci levels, lining up right above that 170 or that 7150 level. Actually, this is 7105. Oops. All right, so correction. Yeah, I'm reading it wrong. My eyes are a little bad. So we have two 127 extensions right at that 71-cent even handle. Good psychological number to get involved with. That's what I was thinking of. I kept saying 7150s. But if we look left, we also have a nice little pregnant pause in the market. So a very minor level of structure, but if you're someone that is conservative, this is gonna be the first place you would be looking to take profits out of the market, unless you're shooting for a retest of structure highs. And we can also look for a continuation to the upper part of this level, about 72 cent there. So pretty nice opportunity on the Aussie dollar. This is an opportunity for both day traders and swing traders. Swing traders, obviously you have the pullback. Day traders, whenever we find ourselves in a position where we have a large target, where we have a projection that price is likely to go to, we can always head down to the lower time frames and look for those intraday opportunities as well. So Aussie dollar, classic pullback trade, classic structure trade. Keep an eye on it. Again, first level I'm looking for is 71 cent. Second level is going to be about 72 cent. All right, so I hope you guys enjoyed the video, and don't forget, next Sunday, July 28th, we're going to be premiering that Foundation Course 2.0. Make sure you clear your calendars. Again, I don't have a time yet, but in a few days, I will be setting up the event on YouTube, and if you have that notification button clicked and you're subscribed, it'll let you know exactly when it is. Also, do me a favor, make sure you spread the word. That way we can have as many people as possible. We can get as much feedback as possible, and I can create the best course possible. All right, hope you guys enjoy your weekend. And until then, plan your trade, trade your plan. Take care.